Hi dear traders, today is Tuesday, September 20. I'm ready to share a market review for InstaForex with my viewers. Let's discuss my trading days on charts. You're probably aware that the crucial event of the week is the policy meeting of the Federal Reserve. The central bank is going to announce its interest rate decision tomorrow. The important macroeconomic report is Canada's inflation, which is due tonight. Those who trade the Canadian dollar may strike when the iron is hot. Thursday is also loaded with important events. The Bank of Japan will hold a press conference. The central banks in the UK and Switzerland will also take their decisions on interest rates. Now, the currency market is taking a breath ahead of high-impact events. Perhaps we could find some hints about further market moves. Let's go! The first trading instrument to discuss is gold as usual. Today I try to make a forecast for gold. There is a curious situation with gold. Some traders are selling gold on the basis of indicator analysis. Indeed, stochastic, MACDs and other indicators are pointed downwards. Those traders find this market situation appropriate to sell gold, which has been falling for a few months in a row. A series of market-moving news is ahead this trading week. I wouldn't be surprised if sellers' stop losses are activated by a false breakout of the highs formed yesterday and the day before yesterday. I mean that I noticed buying pressure yesterday and we were able to buy at a false breakout. Hits on the chart. Always plot trading scenarios on the chart when I predict something. Bang! It comes true. Now we could enter the market at the levels of the American upward correction. We could set a stop loss 500 and 600 pips down on a take profit almost 1,200 pips up. We could earn from corrective rallies in gold. Nobody knows how the price will move in practice. If I were a gold market maker, I would take money from those sellers. The next instrument is the euro-dollar pair. The euro is hovering at lows. I expect it to test the 61% Fibonacci level. Retail traders are entering the market now before the Fed's announcement of interest rate tomorrow night. The market has already priced in the rate hike of 75 basis points following the inflation data. However, the market is on edge because the US Fed might decide on jumbo rate hike of 1%. If so, the euro will take a nosedive. Another surprise could be an increase of 0.5%. Analysts would say that the US Fed is frightened. Then the euro could jump in response. I predict a rate hike by 1%. I'm puzzled about some previous price moves. Well, I'm going to trade the currency pair tomorrow night. This black candlestick was formed after the US CPI. Since then, the euro has been going up. My gut feeling tells me that the euro will tumble following the Fed's decision. Meanwhile, there are no trading signals. The pound sterling has been stuck at lows. This week is crazy for the pound. Tomorrow, the US Fed will raise interest rates. On Thursday, the Bank of England will also increase the key rate. The first rate hike will push the pound down. The Bank of England is likely to support the sterling. Complicated? My simple trading strategy is not generating any signals, so we can neither buy nor sell it. I understand your feelings. You want to buy it at lows. Let me warn you that the sterling might plunge ever lower. Even lower. I had the same situation in 2020. I bought the pound and then had to shift stop losses or close positions at a break even. The dollar-yen pair could be traded according to our long scenario. I believe the yen is sure to update the high of this year. The Bank of Japan is over with its verbal interventions. The nearest market catalysts will be on Tuesday. Forex speculators might interfere as they trade with robots. I see the upward trend line. The yen is still trading under the impulse triggered by the record US CPI. The US dollar surged in light of the US CPI, but the yen is getting weaker because the Bank of Japan is sticking to its ultra-loose monetary policy, unlike major central banks. Due to such striking differences, traders in no hurry to open short positions. If you open long positions earlier, you may try to get rid of some positions at a breakout of the highs of the week. A few pips later, you can take profit and withdraw your gains. There's an interim target. You can close part of your positions, close another one at a break even and wait for the updated high. That's all I wanted to say to you today. See you online soon.